Good evening. It was decided to do an event in Dubai on the 23rd of September. It was a Friday. By popular demand, we have shifted this event to 24th September, the Saturday, so that it would be convenient for you people to attend. So I'll be in Dubai on the 24th of September at 6 p.m. Hope to see you in Dubai. Those desirous of participating in the Dubai event can contact us at the WhatsApp number given below or mail to the email ID given below. We will see you in Dubai. Kindly drop us an email or send a message on the WhatsApp number. Good evening. As we did with Dubai, we decided to move the event in Abu Dhabi also by one day to Saturday, so that instead of 30th September, we'll have the event on 1st October. So I will see you in Abu Dhabi on the 1st of October. Those living in Abu Dhabi need not take the pain of traveling to Dubai. We will see you in Abu Dhabi on the 1st of October. Those who want to see me in Abu Dhabi may drop us an email at the address given below or contact us by the WhatsApp number that flashes below. My team will get in touch with you. Thank you.
Hi everyone, welcome back to Be Rich. It's nice to see you guys online today evening. I thought we will talk about a few things I've been reading about in Bloomberg, which is quite interesting, Anand. First is this global tumble in the first global bonds tumble in their first bear market in a generation. So I know that's a headline grabbing
It's
thing,
true.
So what is the implications of this?
The main implications are going to be for governments across the world. So far, the last major spike in interest rate happened in 1980s. But the interest rates have continuously started to drop from there. It was 20%. Treasury yield was 20% there. From that, government borrowing at 20%. From there, it came slowly down. And in 2000s, it was 5 and 6. You brought it down to zero and you brought it down to negative. People are buying and people had confidence, so you were printing money like there was no tomorrow. Now what has happened is we discussed this. 2, 3 things have happened together. One, there is a commodity storm because of the Ukraine-Russia war, and they are now talking of a price cap in Russia. Iranian oil is off the market. So you have created an artificial shortage in
Oil.
You have created an artificial shortage in oil, and Russia has pushed up the price of gas. So this is one commodity storm. Ukraine and Russia are the major exporters of wheat and sunflower oil. Even though they have opened some channels, there's a shortage of wheat. If you're seeing, wheat prices have been going up. And in fact, there's a fear that one of the world's largest consumers, India, which is not imported for now 2 decades, may turn to be an importer. All this will push up, right? Food prices are just climbing. So food is climbing, commodity is climbing, and therefore transport is climbing. And so all other associated costs will start to climb. And when this happens, people's wages also will start need to go up. So this is inflation. And when wages get entrenched, wage demands get entrenched, you have entrenched inflation expectations. Therefore, to crush it, central bankers have to increase interest rates. When you increase interest rates, already bonds have been issued at 0%. Now, if the Federal Reserve says that the risk-free rate is no more 0, it is 2.5, then bonds which were issued at 100 have to become 97.5 to adjust to that. So, otherwise, I won't buy it.
Correct.
When I can buy a 100 rupee bond for 2.9 and get 2.5 interest, then you have to give me the 0 rupee bond, zero yielding bond at 97 for me to make an yield.
Correct.
So this is the bear market they are talking of. If you draw a straight line across an x and y axis, 0 is the point where the government securities is. As you keep climbing, the interest rate gets higher and higher. And therefore, in America, junk bond rates have gone up. India does not have a junk bond market. But junk bond rates will be off the charts. That is why Goldman Sachs and JP Morgan and other bankers, which agreed to finance takeover deals at startups at very low interest rates, are now finding they are not able to raise money. but they have to honor the commitment, and they are losing a lot of money. In fact, in one case, Goldman Sachs lost 25% of its capital in this such a case.
Okay.
So this is the global bond market, and this has not been there since 1980. So bond markets have been in a bull run since late 2000. So for 23 years you have had a bond market and the bond bull market, and the last bear market was in 1980s, big bear market. And now you are going towards a bear market. The market underestimated or overestimated. The correct word is overestimated. The market overestimated the ability of the Federal Reserve to fight inflation, to control inflation, thinking rates don't have to go up as much as that. And that is why the market rallied throughout last month. Now it is very clear the Fed is unable to honor its promise, or did not mean to say that, and now it has reversed to say we will keep on increasing interest rates till inflation comes to 2%.
Okay. As a layman, I just want to understand something. First, we had inflation going out of control because we had a lot of free money in the market. So a lot of money was chasing goods, so the price was going up. Now what's happening is people's wages are not going up, prices are already at a high, but now we have a supply choke, which is also creating more inflation. So how making money more expensive, how is it going to help the common man? Because this is a generational shift, like what you rightly said. Most of us, even including me, has not experienced this. We don't even understand, fathom what it means when interest rates goes up, because we have had so much of free money.
So you will destroy demand, no? If there is no demand, nobody comes to the petrol station to fill petrol. There will be no demand for crude oil prices will fall. If there is no demand for steel prices will fall. So you could do this by destroying demand. There's no other way to do it.
So that means there's going to be a lot of actual pain, not only in terms of just generic pain, what they just say.
No. There's going to be intense pain.
Yes.
There is going to be a lot of job losses. There are going to be a lot of salary cuts. And there's going to be a lot of
That
pain.
means if literally the fabric of our society itself is going to go through
The fabric of American society is going to be tested severely over the next 15 months, yes.
because Biden had come out last evening and he gave a fiery speech. I don't know if you caught any bits of it, where he said he's blamed entire this Trumpism. He's blamed that, saying they've stolen democracy from, and they're in a precipice.
That is a political
thing.
That is political. He is now making sure that every non-committed Trump voter who is also voting Republican in this election will not vote for Trump.
Because
it's no more Republican Democrat. It is Trump versus
America.
It is liberal democracy versus Trump. And the Republicans were foolish enough to vote all Trump's candidates in nominees, giving him an easy part. He did three things right last month. He had a Build Better America. Basically, he was willing to spend more money. He is now called it Inflation Reduction Act. That's a bullshit. It's an oxymoron. Basically, he is giving more money, which he doesn't have. That means it's going to fuel increase inflation. The second thing which he did was what is called as the CHIP Act. He put $53 billion in creating facilities for manufacturing chips. And the third thing, the most populist thing he did, he wrote off $20,000 of student debt for anybody who has a salary of $125,000 or less. And if you make $125,000, you are in the top 15% of America. At the age where people have student debt, they are which is in their 30s, you are in the top 1% of America. For to write $20,000 is basically a bribe.
True.
And the Congress didn't want to be the guy who stopped it, Senate or the Congress. So everybody voted it through. America is spending money it does not have, and therefore it ties up with that. It needs to borrow more, and when it needs to borrow more, interest rates will be higher. That is why I'm saying the next 10 years is going to be extremely difficult for equity.
For equity markets. And do you think the equity market has started waking up to that?
I don't know. I don't think so at all.
Yeah, because I read this other interesting article in Bloomberg where it said this 17 months spree ends as Indian funds sell stocks. What that basically the article is saying, for the last 17 months, FIIs have been pulling money out Now FIIs are slowly getting. One second, I'm just saying what the article says. I know you have huge contention in this article. I just want the viewers to know what the article is saying before you go with your guns on it. Now they're claiming the FIIs have suddenly turned a corner with India and are starting to pour money back in, and the domestic institutional investors are now selling and erasing their positions.
This happened only for 30 days when the entire world thought that inflation was licked. Till Mr. Powell came out and said, no, inflation is not licked. We are going to keep ramming rates down your throat. And then even the Indian markets have reacted. Normally, today, eternal bullish investment manager said that the economy is tanking in India. Don't get carried away by the headline number of 13.5%. That is in comparison to first quarter of last year, where for the first time we touched zero. You teach zero. So from zero to this number, 13.5 is a great number. Now let me just flip it over. Over 3 years, your total GDP in this first quarter has grown 3%. That is, if your turnover was 10,000 rupees 3 years ago, your turnover is 10,300 today. And wholesale inflation for half of that period has been 15%. Okay, but these are real numbers, not nominal numbers. But the real pain point is you look at GDP in terms, because we had somebody who said we'll make a $5 trillion economy. Somebody promised you a $5 trillion economy. And if you look at GDP numbers, we are back where we are not yet where we were 2 years back. That is, you had 21-22, now you have 22-23. You are not even where you were in 1920.
True.
Okay? Now in 1920, the dollar was at 65 to a rupee and you were at 35 lakh crore. You are at the same 35 lakh crore, rupees 80 to a dollar. Forget 5 trillion. You are not even in a position where you were before.
Correct.
In terms of dollar, you have gone back long back.
Yes,
And the concerned person, you have gone back 5 years.
Right.
And the concerned person is now still talking about India being the fastest economy in the world. Can there be a more cruel joke than that? I didn't say 5 trillion.
No, I agree. I just wanted to clarify because this is an interesting article. So I thought our viewers would enjoy your analysis of this. Another thing which I want to talk about was Warren Buffett's Berkshire Hathaway has been offloading its shares in the Chinese EV giant BYD. What do you think about that?
It is expected, no, because the way the Chinese government has clamped on all companies, it has not yet luckily clamped down on this company. Buffett wants to get his backside straight before he gets this is hammered.
So is this like a warning?
This is a warning because already Chinese markets are at a severe low.
Correct.
And there is no consumer demand in China and there's a mortgage problem. So China is going through a classic debt problem. Multifaceted problem with an authoritarian dictator on top. Buffett is willing to get out when he is able to get out.
Cool. Anyway, so these are some interesting articles I thought we would read today and get into. I hope you guys found it interesting, and we'll come back with some more tomorrow, I guess.
Thank you. Thank you for watching. Be Rich. If you like the content, hit the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified whenever we put out a video. Once again, thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.